Today for Daily Bread for September 22nd, 2025, we've had some pretty significant moves happen in markets, but not for the reasons that people might necessarily think. In the short term, what moves markets aren't long term narratives, but short term liquidity and positioning of different market members. So, what we saw today was Bitcoin falling 2%, which isn't crazy in and of itself. We are at the peak of a liquidity cycle where the liquidity is downtrending until basically the end of October. This is something we've been paying attention to for a while now. What is interesting is that at the same time, we have S&P, NASDAQ, gold, and Russell making new all-time highs or continuing their bullish trend, which is making people scratch their heads a bit. They're like, what's going on? Why are we getting such an upward movement in equities, but the biggest risk asset of them all, Bitcoin, the the granddaddy of them all, isn't moving? Well, that is because the move that we're seeing right now seems to be based on the options market. If we take a look at Twitter, someone summed it up on Twitter. This is Scott Polsini Trader, who was sharing something from Spot Gamma. So Spot Gamma has a focus on options. They have an indicator called a hero indicator, amongst other ones that pay attention to the options market. And he was saying that, well, I'll just read it here. So Spot Gamma Hero Flow Indicator near an unprecedented $14 billion and causing nothing but buy stop pukes in the NQ, that's the NASDAQ, all day, with the vertical move continuing to print all-time highs. Brent from SpotGamma.com, who founded Spot Gamma, also correctly called the whopping hero flow was going to push the ES, this is the S&P, near its 99th percentile. SPX Gamma strike of 6,700 on his members webinar this morning. If you're not watching the dominating options flow GEX levels, you simply do not have the primary market moving information in your trading. Basically, what that means, if you're not familiar with options, is that essentially the derivatives market for these futures are moving the markets. Peter, I was trying to explain to people that options, although it's a derivative of the futures from the indices, actually, because the volume is so high,
Right.
that what happens in the options market actually directs what happens inside of the spot market.
It's
So
like a Minority Report type thing where once you know that the person's going to commit the crime in the future, then it affects the present.
no, not exactly that. It's far more the idea that can happen. But what normally happens is that the people selling the options contracts,
Mm.
they're not trying to make any directional bet for their positioning. When they're selling you, if you're taking a bet that the market will go up, they're not trying to take that bet with you. If they're selling you that contract, it's not that they're betting the market will go down. And so, in order to counteract it, in order to be hedged in their books, to be balanced, so that the only money that they're making is based on the fee transaction with you, they don't want to make money because of the movement of the market. They have to then go buy the market. So if they're selling you calls, let's say, and you're betting the market's going to go up, they're taking the other side of that bet. They then need to buy calls in order to balance off, so that the market moves up, they're not caught, with their pants down. And so you have this effect that if there's a lot of volume within the options market, the market makers, the dealers, have to behave in a certain way in markets in order to keep their books hedged. And in some circumstances, like you are right now, an upward movement can come with upward buying from market participants. Because as the market goes up, those options become more and more valuable, and then more hedging needs to occur, more buying happens within the market, and you have this virtuous or vicious cycle, depending on how you think of it, that happens. And the same thing can happen on the other side. Now, it's not always that case, right? You can have it where the opposite is true. That as the market goes up, the dealers sell in order to bring the market back down, and as as they're selling, they bring it back up. Sometimes the market makers, they're benefiting from being they need the market to stay pinned in a certain range, so that can happen too. But the opposite can happen too as well, like we're seeing today, where price move is exacerbated towards the upside or the downside. Today's case is the upside. And one of the ways you know that the options market is what's actually moving things is that you're not seeing corresponding movement in a sibling asset such as Bitcoin. So Bitcoin is not being subject to the same flows that we're seeing in the options market. It has its own dynamics. It's following global liquidity more directly. And so that can fall as equities move up. What does that mean at the end of the day? It means that the expectation should be that equities eventually sell off in order to follow what Bitcoin is doing. All right. We've seen that a few times before. If we take a look at Bitcoin over here, we can see, for example, around 2024, right now you're seeing Bitcoin on this chart over here. Over here, you're seeing the S&P, and over here, you're seeing the NASDAQ. And you see that Bitcoin can fall. So over here, Bitcoin is falling. The S&P is still going up, and then it rolls over and falls to match Bitcoin. All right. So that would be my base case, that once this buying pressure is done for the S&P, NASDAQ, and the Russell, that will have a move lower in equities, significantly lower. Now, the other thing that's going on right now is the dollar seems to be confirming a bearish trend. This bearish trend here. So the dollar is down, is moving sideways. The dollar bounced up after the Fed meeting last week, and now seems to be confirming that it's going to be falling back down the other way. And what's
good?
Well, like we always say for markets, some things, it's good if you're positioned correctly. It's not good if you're long dollar. It's good if you're short.
Good for Bitcoin.
It can be good for Bitcoin depending on the reason for the sell-off. So it could be potentially good for asset prices, but you don't know for sure. And it could be bad in the short term, good in the long term. These things, especially when it comes to currencies, can be long moving things. But what's interesting is that although we've been talking about this upward trend in the dollar over the last, let's call it, since the global financial crisis, we've been talking about since basically 2008, the dollar's been going up and to the right. The idea is that if you think this trend will continue up and up and up, you might be wrong. It could be that the dollar is breaking down here and that it's actually going to break lower to the bottom of a channel. What channel is that? Well, we zoom out to the weekly to show more. So this is the dollar over a longer time period all the way to the 1980s. We have a channel like this and like this, where the dollar might actually be not only breaking down lower, but headed all the way down to 60s.
What?
Which would be a very Peter Schiff-like move in the dollar.
Is that a good thing for Bitcoin and alts?
It certainly means that anything that's priced in dollars is likely to go up nominally. So Bitcoin, assets, gold, and we're seeing gold sort of confirm this sort of idea with this rip in gold, right? So this is gold ripping up, and it's just skyrocketing. So the last time gold broke its high over here, it then went up to move up another 2x, 3x that. So now if we're breaking the high again, we might only be halfway through this move, and gold could hit 6,000, 7,000 before we know it, especially if the dollar is going to be falling.
Peter Schiff was right.
Look, far be it for me to take a win from a person.
Sure.
That's it for Daily Bread for today. We're going to be back tomorrow with more market updates as always. So feel free to like and subscribe. Thanks, guys.